After years of anticipation, USDC issuer Circle is getting ready to go public. On the surface, this could help Circle become one of the most profitable companies in crypto. However, once you dig a little deeper, you realize that this success is far from guaranteed. That's because many observers have pointed out a number of red flags, which could make it a potentially risky investment. That's why today we're going to do a deep dive to determine whether Circle's stock has potential or if it's doomed to fail. My name is Guy, and you're watching the Coin Bureau. I'll start by saying that nothing in this video is financial or investment advice. This is purely educational content sprinkled with that Coin Bureau charm that you know and love. But if you're looking to maximize your crypto gains, then you have to check out the Coin Bureau deals page. It's got exchange sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and exchange deposit cashbacks of up to 75%. These deals won't be around forever, so click the link below while you still can. Okay, so with that out of the way, let's dig in. Now recently, Circle made headlines when it announced that it had filed with the SEC for an initial public offering, or IPO. But to understand why this is significant, let's start with a bit of context. Circle Internet Financial Inc., or just plain old Circle, was founded in 2013 by Jeremy Allaire and Sean Neville, who have worked together for decades to build and later sell or IPO cutting-edge tech companies. Jeremy has served as the chairman and CEO of Circle since it was founded, while Sean served as Circle's president until late 2019, when he stepped down to join its board of directors. Jeremy later revealed that Sean was still involved with Circle, working on secret stuff. Interesting. Anywho, Circle's original focus was Bitcoin payments, and it wanted Bitcoin to be the foundation of a new financial system, albeit one that's closed and centralized rather than one that's open and decentralized. In 2017, Circle and other TradFi entities collectively tried and failed to push a number of changes to the Bitcoin network. These included adding smart contract capabilities, as seen on blockchains like Ethereum, as well as increasing Bitcoin's block size to make it scalable enough to handle their plans for a reimagined financial system. This plan, called the New York Agreement, was actually overseen by Digital Currency Group, or DCG, which has stakes in many top crypto companies, including Coinbase and Circle. Anyway, Circle soon realized that Bitcoin isn't the ideal payments network and instead turned to Ethereum, where it decided to build its own stablecoin in 2017. After raising around $110 million in 2018, Circle launched US Dollar Coin, or USDC, on Ethereum. That same year, Circle teamed up with Coinbase, one of the largest centralized exchanges in the world, to create the Center Consortium. Now, the goal was to set standards for stablecoins issued on public blockchains and to govern the issuance and redemption of USDC. The consortium was dissolved in 2022, apparently because it was deemed no longer necessary due to clearer stablecoin regulations in the US and elsewhere. Circle subsequently acquired Coinbase's 50% stake in the company and became the sole issuer of USDC. In turn, Coinbase received 50% of the revenue generated from USDC's reserves. More on that later. Now, as most of you will know, USDC is pegged to the dollar and is backed by cash and short-term treasuries, aka US government debt. USDC is the second largest stablecoin by market cap behind Tether's USDT, with around $60 billion worth in circulation. USDC is currently supported on 19 blockchains and counting, and makes up roughly 26% of the total market cap for stablecoins, while USDT makes up about 62%. However, USDC's market cap has grown significantly more than USDT's in 2025 so far. And speaking of statistics, did you know that 36% of you aren't subscribed to this channel? So hit those like and subscribe buttons and ping that notification bell to make sure you're not missing out. Now, as we mentioned in the introduction, Circle's latest attempt at an IPO is keenly anticipated, partly because the company has been trying to go public for years. Circle's first attempt was way back in July 2021 via a merger with a special purpose acquisition company, or SPAC. Now, because this was in the middle of the previous bull market, there was a lot of excitement around Circle's potential IPO, not least because Coinbase had also gone public just a few months previously. However, despite multiple extensions, the attempt came to nothing after the SEC failed to sign off on the proposal in time. Circle ultimately scrapped its IPO proposal towards the end of 2022 after FTX collapsed and brought the entire crypto market crashing down with it. Put simply, Circle knew that launching at such a chaotic time would have been begging for increased and probably unfavorable regulatory scrutiny from the SEC. But this wasn't the end of the matter. In January 2024, Circle filed a confidential draft registration for another IPO attempt. And then on the 1st of April this year, Circle filed again with the SEC, this time to launch its stock on the New York Stock Exchange under the ticker CRCL. Notably, the stock's proposed price and the number of shares are not yet known. This will be revealed in a later filing. Anyhow, the latest filing from Circle is actually a continuation of the January 2024 filing we mentioned just a moment ago. The reason why this process has dragged on for so long is simply because of the hostile regulatory environment prior to Donald Trump's re-election in late 2024. In the filing, Circle said, quote, "We think that we can create a new defining internet platform company that is built on the internet financial system, and we believe that we are still in the very early stages in the development of this new financial system." However, CEO Jeremy Allaire has said that Circle will have to navigate a highly regulated and evolving ecosystem, a complex global macro environment, and the challenges that arise from intersecting crypto with the legacy financial system. In the risks section of the IPO filing, Circle noted the competitive nature of the crypto industry and its ability to monetize its stablecoin network as its two biggest hurdles to overcome. Notably, the company is reportedly aiming to launch at a valuation of up to $5 billion, much to the confusion of some investors. We'll come back to why this is confusing in just a moment. Now, while the announcement on the 1st of April had many excited about Circle going public, these feelings were dampened on the 4th of April. That's because Circle is reportedly now delaying its planned IPO due to all the macro uncertainty caused by, yep, you guessed it, the tariffs that were recently implemented by President Trump. And you can learn more about those by checking out the video right over here. Moving on. In any case, the Wall Street Journal reported that Circle is now, quote, waiting anxiously before taking any further steps, and it's not alone. Other companies, both inside of crypto and outside of it, are likewise considering holding off on launching their IPOs too. These include Klarna, a well-known buy now, pay later company, and the ticket company StubHub, to name just two. Now, Circle's decision to potentially delay its IPO comes at a time when markets of all kinds are taking a beating, following Trump's announcement of a 10% base tariff along with much higher tariffs on certain countries, particularly China, on the 2nd of April. This spooked the markets big time and stoked fears of a possible global recession. And naturally, this means investors everywhere are ditching their riskier investments for safer alternatives. For perspective, the total value of the US stock market has fallen by a staggering $10 trillion since Trump's announcements. In fact, the damage has been so catastrophic that Trump has had to roll back some of his tariff plans. So, uncertain times, to say the least. Now, what's crazy is that Circle's recent IPO filing is the first time that the company's full financials have been made publicly available. And it didn't take long for investors to realize that Circle faces additional challenges besides Trump's tariffs and whatever else. And this is where things get seriously interesting, so pay close attention. The filing revealed that Circle had minted roughly $504 billion in USDC and redeemed about $464 billion in USDC between the 1st of January 2021 and the 31st of December 2024. We should note that while this high turnover reflects the heavy usage of USDC, it doesn't necessarily equal profit. The filing also revealed that in 2024, Circle's revenue was $1.68 billion, more than 99% of which was generated by managing USDC's reserves, which, we'll remind you, primarily consist of US Treasury bills that earn interest. Notably, Circle's 2024 revenue was up 16% from its 2023 revenue of $1.45 billion. So, all pretty good news, right? Well, yes, but there is a catch. That's because Circle's operating income, which is basically what's left after paying for day-to-day operations like salaries and overheads, was just $167 million before interest and taxes. That's just 10% of its overall revenue, which is spreading it thin, to say the least. In fact, Circle's adjusted EBITDA, which stands for earnings before income tax, depreciation, or amortization, was just $284 million. For anyone unsure, EBITDA essentially measures a company's core profitability before expenses. In a nutshell, it takes a company's operating income and then adds back any depreciation and amortization, which are non-cash charges that account for the gradual decline in asset value over time. But for many investors, the biggest red flag of all has to do with Circle's former Center Consortium partner, Coinbase. As you'll recall, Coinbase takes 50% of Circle's revenue generated from USDC. What this means is that in 2024 alone, Circle paid Coinbase a whopping $908 million. Now this is insane because it's more than half of Circle's overall revenue and more than Circle itself earned from USDC. This is making investors incredibly nervous, and that's because these payments to Coinbase mean that even though Circle's revenue grew in 2024, its profits actually shrunk. To make matters worse, the IPO filing also revealed that Circle's financials seriously struggled during the bear market of 2022, when the company actually saw a net loss of $761 million. Logically, this means there's a good chance that Circle will be bleeding cash whenever the next bear market comes around. When you combine everything we've just covered, it isn't hard to see why some investors are having a hard time understanding Circle's self-evaluation of being a $5 billion company. To be blunt, the overall picture doesn't exactly scream profitable investment. But here's the thing. While Circle's financials appear shaky at best, there are a number of bullish factors that could cause its stock to pump. The obvious standout here is the massive yield being generated by Circle's reserves. Recall that this is how Circle has made almost all of its revenue. In case you haven't noticed, interest rates have been high, and many believe that they'll stay high as a result of inflation related to Trump's tariffs. These higher interest rates could paradoxically be good for Circle, since it means that its USDC reserves will rake in more passive income. Naturally, this would significantly boost the company's revenue, which would make its financials much more attractive to potential investors. And not only that, but it was revealed in Circle's IPO filing that it could be working with JP Morgan and Citibank, two major financial institutions that will serve as underwriters for the IPO listing. These Wall Street giants will support Circle's IPO by providing financial backing. This backing gives Circle massive potential for expansion, especially when it comes to USDC's role in payments. Now, if you watched our video on PayFi, you'll know that this is one sector that's all but guaranteed to see rapid growth and adoption once stablecoin regulations are passed. This will seriously drive demand for stablecoins like USDC, which will in turn boost Circle's revenue in a big way. And this relates to another way that Circle could exceed expectations, which is its offering of lesser-known products. These include EURC, another stablecoin that's pegged to the euro, and Circle's recently upgraded Cross-Chain Transfer Protocol, or CCTP. The newly introduced CCTP version 2 allows near-instant transactions between chains, making USDC highly liquid cross-chain. Circle also offers Circle Mint, a service that lets exchanges and institutions mint large volumes of USDC without incurring transaction fees. This potentially positions USDC as the weapon of choice for investors looking to move substantial sums of US dollars in a digital way. Meanwhile, another bullish tailwind for Circle is one I touched on a few moments ago, and that's clear stablecoin regulation. While this is very much still a work in progress, Congress has taken considerable steps to create federal stablecoin laws with bipartisan support for clearer regulations and enhanced oversight. In February 2025, Senator Bill Hagerty introduced the Guiding and Establishing National Innovation for U.S. Stablecoins, or GENIUS Act. Basically, the GENIUS Act aims to establish a universal regulatory framework with oversight from regulators like the Federal Reserve and the OCC. In March, the U.S. Senate Banking Committee approved the GENIUS Act with bipartisan support. And in April, the House Financial Services Committee approved the Stable Act, another attempt to bring regulatory clarity to the industry. As a result, many analysts expect stablecoin regulations to be passed in the next few months. Now, clear stablecoin rules will undoubtedly boost investor confidence, further driving institutional adoption. And yet one more bullish factor that many analysts seem to be overlooking is Circle's recent acquisition of Hashnote back in January. Now, for those unfamiliar, Hashnote is the issuer of US Yield Coin, or USYC, one of the biggest tokenized real-world asset funds by market cap. In the announcement of the deal, Circle said it would, quote, enable USYC to emerge as a preferred form of yield-bearing collateral on crypto exchanges and also with custodians and prime brokers. Notably, the announcement also said that Circle intends to fully integrate USYC with USDC, although we should caveat that USYC isn't available in the US at the time of shooting. Regardless, integrating USYC with USDC will position Circle as a leader in tokenized real-world assets, or RWAs, and could also create new opportunities for the company to generate additional revenue through management fees and interest income from USYC. So then, all of this begs the question of whether Circle's CRCL stock will actually be worth it once it does eventually list. Well, the answer is a bit of a mixed bag, but it seems that CRCL's success is largely dependent on timing. Put simply, Circle could seriously benefit from the bullish factors we just mentioned. But if the IPO goes live during the peak of the bull market, then CRCL could go down only, just like Coinbase's CoinStock did when it launched back in 2021. And if Circle's stock is launched when sentiment is already low, this will make it almost impossible for it to hit the ground running. But for anyone wondering if the bull market is still in play, ask yourself this simple question. Would all the companies we mentioned earlier, like Circle, Kraken, Gemini, Ripple, and others, be even considering an IPO in a bear market? Clearly, these guys aren't concerned about the recent drawdown, which suggests that the pain we're all feeling is only temporary. This is significant because crypto speculation continues to be the primary demand driver for stablecoins. In the case of USDC, its primary demand driver is speculation in DeFi. If we get another wave of crypto speculation, chances are there will be significantly more DeFi borrowing, which will ultimately benefit Circle, since this borrowing will have the practical effect of minting more USDC. And Circle could also benefit from the RWA sector, which we believe could also be one of the most successful crypto narratives this cycle. Recall that Circle's acquisition of Hashnote and its tokenized USYC fund has positioned Circle as a major competitor in the RWA narrative. This has allowed the stablecoin issuer to tap into the institutional liquidity that will be flowing into RWAs. Still, there's no denying that the details revealed in Circle's IPO listing do leave a lot to be desired. In fact, some analysts have said that Circle has been overspending in an attempt to maintain its competitiveness in the stablecoin sector. And this calls into question how sustainable this really is and raises questions around Circle's risk management capabilities. Some of the more skeptical analysts have even suggested that Circle's IPO filing could be nothing more than an attempt to gain some extra liquidity before the next crypto bear market hits. And if we're being honest, it's not hard to see why some would think like that. To be frank, it's kind of difficult to see why many investors would be inclined to ape in to Circle's CRCL stock in the short term when practically everything is pointing to them taking on more risk than they bargained for. From our perspective, the long-term success of CRCL largely depends on how long Circle will have to share 50% of its revenue with Coinbase. That's because Circle's IPO filing mentions a 3-year term, which can be extended for another 3 years. Now, it's unclear if this deal can be extended again in the future, but what is clear is that the deal can be terminated. However, Coinbase will only want this to happen if it launched its own coin. Unfortunately, Coinbase is adamant that this won't happen, but that's not to say that it's definitely ruled out. So then, it remains to be seen whether Circle's IPO will go ahead in the face of Trump's tariff whirlwind, or whether the company will wait for wider macro conditions to improve before going public. In any case,
watch this space. Thank you.
Now, if you want to see my colleague Nick interview Circle's CEO Jeremy Allaire, then check out this video right over here. And if you want to see our top 5 stock picks for crypto exposure, then you can check out this video right over here. Okay, thank you all for watching, and we'll see you in the next one. This is Guy, signing off.